Do you know who Charlie Munger is? Are you familiar with his 5 pillars of financial success? If not, worry not. We have got you. Mr. Charlie Munger is well known in the financial industry, and both his in-depth knowledge and distinctive insights have significantly contributed to both his own success and the success of many investors around the world. As the renowned vice chairman of Berkshire Hathaway and a longtime business associate of Warren Buffett, Munger's perspective is priceless. Munger started his career in 1924 in a grocery store run by Warren Buffett's grandparents. He was born and raised in Omaha, Nebraska. He obtained his Juris Doctor from Harvard Law School in 1948. Munger, like Buffett, has a unique viewpoint and takes an unconventional approach to investing. His advice to always take the high road, it is much less congested, exemplifies his distinct viewpoint. Due to Munger's remarkable success and fortune in such a short time, many people aspire to be like him. However, we must take note of Munger's ideas and experiences so that we don't repeat his errors in our own endeavors. Throughout his illustrious career, Munger has become well known for his creative and wise approach to investing. We'll examine his theories on achieving financial success today, which he refers to as the 5 pillars of financial success. So take a seat, unwind, and let's explore Charlie Munger's revolutionary ideas for achieving financial success. Charlie Munger says that you should only invest in things you understand. Why is this important? From his early investment in William Miller Instruments, which failed as a result of the advancement of superior magnetic tape technology, Charlie Munger learned a lot. He learned from this experience how wise it is to stay away from volatile business sectors. Munger therefore promotes investing in industries where people have deep expertise. He believes that it is preferable to invest in what one already knows when given the option between a familiar and a novel alternative. Munger emphasizes the value of having self-awareness and competency awareness. He urges people to face and learn from their mistakes, rather than be tempted to overestimate their intelligence. By acknowledging our limitations and concentrating on what we truly understand, we can improve our long-term outcomes and make more informed investment decisions. Why is it important for investors to be self-critical? Charlie Munger challenges the widely held belief in unwavering optimism and encourages investors to be more rigorous and introspective. Munger delivered a memorable speech at a Los Angeles prep school in 1986, emphasizing the importance of actively considering potential disadvantages when making critical decisions. Rather than simply asking if a decision is good, Munger advises people to broaden their perspective and consider whether it has the potential to be disastrous. This deliberate mental shift enables investors to conduct a more thorough assessment of the underlying risks and potential downsides. Munger's concentration on self-criticism is consistent with his belief in the intrinsic value of being realistic and pragmatic. Munger advocates for a moderate and careful approach to financial decision-making by avoiding excessive optimism, which can blind people to possible hazards. And what practical strategies can we employ to maintain a realistic and pragmatic mindset? What are some of the benefits of learning from your mistakes? While affluent investors frequently collect numerous artifacts, Charlie Munger's collection is unique in that it focuses on the dumb behavior of others. He focuses on a typical but erroneous investing decision: the purchase of cyclical companies at the height of their business cycles. These investors frequently ignore the cyclical nature of a company's performance and fail to recognize the likelihood of history repeating itself. As a result, they miss out on the opportunity to learn from their mistakes. Have you ever learned from your own mistakes? Munger points out the importance of learning from failures in order to succeed as an investor. Individuals can avoid repeating past mistakes and make more informed decisions in the future by admitting and analyzing their mistakes. Munger's unwavering emphasis on the significance of learning from mistakes emphasizes the critical importance of this trait in the area of investment. How can investors be more patient and open-minded to avoid making mistakes in the investment world? Charlie Munger suggests not making hasty decisions. He draws attention to a typical tendency among investors to dismiss any worries or uncertainties they may have, even if these doubts are legitimate and demand careful investigation. According to Munger's observations, people are often unwilling to consider the idea of modifying their minds. This perspective limits their ability to think objectively and logically because they prioritize information that confirms their pre-existing ideas. By surrendering to this temptation, investors jeopardize their capacity to think critically and have an open mind. Munger suggests that exercising patience and a willingness to study diverse points of view might help people improve their decision-making skills and prevent costly mistakes. In summary, Munger encourages investors to take a deliberate and reflective approach, understanding that eliminating concerns hastens their capacity to make well-informed and sensible decisions in the ever-changing financial market. What are some of the things that investors should unlearn? Charlie Munger emphasizes the need to embrace the process of unlearning in order to find novel answers to issues. Individuals, according to Munger, should be willing to let go of preconceived assumptions and information gained from previous experiences, allowing for the exploration of new possibilities. Munger says that in the context of investing techniques, each investment requires a unique and customized approach. Investors should adapt and establish a fresh strategy that takes into consideration the unique qualities and conditions of each investment, rather than depending on a standardized strategy that applies to all scenarios. Individuals can liberate themselves from restrictive mental patterns and seek alternate viewpoints and answers by embracing the concept of unlearning. Munger promotes a flexible and open-minded perspective, allowing people to adjust to changing situations and grab new chances. In order to handle difficult challenges and build efficient investment strategies, Munger emphasizes the significance of unlearning past knowledge and cultivating a mindset of constant learning and adaptability. Here are some additional pieces of advice given by Charlie Munger. Are you sincere in life? According to Munger, no one can succeed if they are not sincere. In all circumstances, whether in business or in life, a person must be honest with his or her beliefs, decisions, clients, and partners. Additionally, integrity has value in the stock market. It is a given that an investor will receive favorable returns if they invest in a trustworthy business. The company's payoffs will be coercive if it is dishonest with its investors. Are you disciplined? Charlie Munger's 3 guiding principles for investing are honesty, discipline, and ethics. Anyone who conducts business in an ethical manner will undoubtedly empower a significant amount of wealth in all senses: cash, information, structure, etc. This is why a person, whether a trader or an investor, needs to practice self-discipline in a way that will bring about a lot of peace despite strange and bizarre stock market circumstances. Have you learned to unlearn? Munger emphasizes the importance of developing a reading habit because every book offers a fresh perspective on previously learned material. Munger contends that there are countless solutions to a problem, and that, in order to see through each one, a person must first unlearn everything they have previously learned from their experiences. In a similar vein, when creating an investment strategy, a person must create a fresh plan for each new investment they intend to make. Are you being vivacious? Charlie Munger despises self-pity the most. Munger could have easily turned to alcohol or drugs, given the circumstances he was in, to distract himself from his problems. He didn't, though. He didn't lack money. Rather, he lacked the willpower to give in to feelings of self-pity. If anyone can help you through your difficult times, it's you, is one of Munger's most famous quotations. Self-pity solicits sympathy from others. Self-pity demands sympathy from others. But what it actually does is push a person to their lowest point. Applying the same principle to equity trading, all traders and investors must see the positive aspects of the situation rather than bemoan them. We sincerely hope that you found Charlie Munger's thoughts to be insightful and provoking. If you liked this video, please subscribe and press the bell icon to receive updates on future discussions and investment ideas. Please share, like, and comment below with your ideas and experiences. Invest wisely,